I am recording it too. I know there's quite a few more people that said they were going to join, but I don't want to wait. All right, I will start with this Bitcoin. And last week we had this candle here on Monday. So let's do a replay here. Let's go back to Monday. And let's jump into an hour chart. So this is where we were on Monday. I'm going to go into a 2 hour. And then we got this, let's jump it forward, this big dip. And then we started getting some, a reaction down here. Now, one of the things I mentioned when I saw this was that it wasn't necessarily the cleanest looking pattern in the world, because we've had this move here, which already was a harmonic, or a harmonic look to it, and then come back down, and then done this. You know, this is kind of its own harmonic there. So it was just not looking too clean. If you jump out to a 4 hour, it looks a little better. If you jump out to a daily actually looks, pretty decent. So that's why you kind of have to bounce between timelines to kind of try and figure out what's trying to set up here. So once I saw this, I was starting to think, okay, well, this kind of looks like it has something to it. If we start breaking out over these wicks here, what was that? That was around 96K, right around here. I think we have something in play. Once I see a harmonic setup like this, and I've drawn my fibs, and let me take the fibs off to tell you how I draw them. So you have this structure. We can take everything away. I've just identified this. So I see that we have this in play. And we've had this wick. So it's looking relatively like something might be there. So first thing I'll do, I'll take my fibs. You go from your swing high to your first swing low, which is here. Not the second one, the first one. And that tells me if we have compromised two Fibonacci levels. 1, 2. This 11 is a minor one, but the 23 is big. And 38. So usually I like to see the 23 and the 38 taken out for confirmation. And then you have this trend line. Yes, I'm recording it. So right now I'm looking at this saying, okay, this is not definitely in play, but you can definitely start looking at potentially taking a long position. Ideally, if this comes back, compromises the 23 and this 96K level, we have something in play. And then I can go to my Fibonacci tool, the XABCD pattern, start plopping in those levels here to see if it qualifies. And then just get an estimate. Next thing I'm going to do, well, first of all, I'm going to look at my retracement levels. So this is 67% here. And this is a let's say 1.2 retracement. I already know, just because I know the patterns very well, anything that goes below an 88 over here, it has to achieve a minimum of a 113 down to a 161.8 to qualify as a harmonic. Now, once you've compromised that 88 and you've come down into these levels, there's only two patterns now in play. One is called a shark, one is called a cipher. So let me pull these up here. So we are looking at either a shark or a cipher.
They're not showing on the screen, your patterns.
Oh. That's probably because I
put them
did this.
in a tab in trading for you just for that reason.
I think I shared the application on the screen. Hold on, I'm going to unshare my screen and reshare it. Hold on.
There you go.
Now you see it, right?
Correct.
Okay. Oops. Now you see it, now you don't. There we go. So we know that we have a bearish shark or a bearish cipher. Technically, the cipher does not necessarily qualify because we went beyond the 61.8 here. I think we got a 67. That doesn't completely invalidate it because it's pretty close and you had some wicks, but everything else fits. So, but because of that, we're going to lean a little bit more towards the shark because that does not have a stipulation for this measurement here. It only matters what this X to, or in this case, because they call the sharks have different letters here, but for this purpose, it's just this A to C called X to B here. And we had a 1.2, so it qualifies here. It's within that range. So we're looking for an 88.6 to a 113. Okay. Now, if we were looking at a cipher, that's got a 786. So let's go back to the chart. So cipher 786, shark 886 to a 111.3. So if we're leaning towards a shark, we're looking for 106,437 minimum. And I always go towards the conservative. So this is a daily chart. So now how do I find an entry on this? Well, there's a couple things that I'm looking at. I'm looking for this 23 to be taken out. I'm looking for this trend line here, or this support resistance level to be taken out at around 96K. So then we can kind of jump in to a smaller time frame. What am I seeing? Is there anything setting up? This actually looks a little bearish here, so maybe, I'm looking for a bit of a pullback here. But we can jump forward. And you start to kind of watch the price getting up to that 23 level, rejecting off of it. And now we've compromised this this trend line here, or this resistance here. So now I can start looking at maybe taking an entry. And maybe we got long around 96, 96.5, and we're going to use this 95.310. We're kind of going to use this as our support. So we're going to take a long at, let's say, 96, 96K, 96,200, and we're going to use maybe 94.6. So we've got like a couple $1,000 in risk here. But again, if you're playing MSTR, BTCL, Coin, whatever you want to play, one of the miners. But if you're going to play Bitcoin directly, you really want to be playing an ETF or MSTR. I think probably the two most popular ones that we've been playing that have a real direct correlation because MSTR owns so many Bitcoin, and that's such a huge part of its value. So I think those are the two that we've kind of honed in on in the room. So we're in now, and we're just watching the price, and we came down to our support area. It held this 23, which is what we wanted to see. If you took a starter here, maybe you added some in here. And we can jump out to a hourly here. Let's go here. Now, we got up to this 38 here. Maybe you took a little profit there. It's only a couple $1,000s worth of profits there. But it's, some way you can scale a little bit. If you added here, scale a little bit here. Excuse me. And now we really took off. So you never really had any blood on the trade. It held where it was supposed to hold. Now you're getting up to the 50% level. You've got this trend line here, so you're scaling more. Why did I choose the 23 versus the 38 level for the entry? Because technically, we've had a really deep pullback here. Because of the harmonic being a shark or a cipher where you've come below this 88, you have a little more room for an entry. You have good parameters here for your risk as far as a level to hold. We could have taken an entry here as we broke the 38 and got a quick scale at the 50. That's fine. But we had a little room in this. The structure was looking good. I liked how this was kind of setting up. Over here, we popped over the 23 and over this resistance level. So you had a good level that established some support. So you knew that your risk was here. If you took a trade here, once you broke the 38, I probably would have wanted to see this level hold, this 96. So actually, there's a little more risk with an entry here. Maybe this was a little more of an aggressive entry, but your risk was a little tighter. So that's just something that, as you get familiar with playing these patterns, you'll figure that out as you go. And we'll talk about Tesla in a minute, and we took a very, very, very aggressive entry on that last week, and it worked out. But also very tight risk. So we're going through the motions here. We've broken out of this pattern here, or off of this trend line here, sorry. Came back in. So you can kind of see it, lots of opportunities to scale at this point. Now we came back down to the 38 and we held it. If this lost the 38 and lost this now support area and the 23, I would be completely out. I have a 2 fib level rule. If you lose 2 fib levels, you want to be out. Exception to that is if you're in runners and you just want to see what happens, you can leave.
Why wouldn't you add back at that 38?
You can, for sure. Once you see this hold, you can add back. I didn't in this occasion, but you can.
Thank you.
I still had enough size on. So now you got to pop up to the 61.8. Another opportunity to scale. Usually by the time I'm at the 61.8, I'm in like a quarter size because these patterns, once they get to the 61.8, it's a pretty big level. Pretty common to get a rejection there. Just a good spot to take a decent amount of profit. And as you can see, it rejected initially. And we popped over. And now we're getting up to the 78, which was the first target for a shark, which we're leaning more, for the cipher, we're leaning more shark, so we're looking for this next one. But there's nothing has ever told us to get out of this trade. We got confirmation here for our entry. We held. We got an opportunity to scale, pull back to one fib level, which is nothing. We held. Another opportunity to scale, another opportunity to scale, another opportunity to scale. And now we jump into the weekend session. And then we came, this was what's Friday? Okay, this is Friday's session. Yep, now we're into Saturday. And we came and hit the ultimate target. We're a few pennies off this 88.
What are those dotted lines with the numbers called? The 1265.
What dotted? This dotted line?
They're right where the money is now. See how it went above that 1265 sloping upward line to D? The B to D line.
Okay.
With the number in it.
Oh, this.
What are those lines called?
This is just part of the harmonic measurement. It's just a measurement line. So
okay, they're not of consequence because I've noticed on occasion that they seem to ride those lines.
No, there's no like support or resistance to this. This is just connecting this B to D. What that number, the significance of that number is if you take a Fibonacci measurement from here to here.
Oh, confluence.
That's the one. That's 127. That's that measurement. So
gotcha. Thank you.
If I take this off, you can actually see it better. There you go. See 127 here?
Gotcha.
That's that measurement. And it's this one here. It's the same. It's just measuring this here, this A to B. And that gives you this 120. So that's all these are. So at this point, we've reached our ultimate target. We are out of the trade. And this is why I said on Friday, ultimately we had 3 potential targets here. 1, 2, 3. We've hit this minimum on a shark. So there is still a potential target of this 111. But once we start losing this 70%, we know we're kind of in pullback territory. So we can jump. We lost it. We lost the 61.8. So now we can actually get rid of all of our drawings. And take a measurement from the low point to the high point. And you're looking for areas where this can retrace to. And one of the things I mentioned, coming into today with the Trump situation, and we've seen how wild the crypto market has been in the last 48 hours. And Trump's been very bullish on Bitcoin, so we were just talking about this trade. Overall, Bitcoin, you have to probably remain a little bit bullish. So the retracement, what are we looking for? Well, if it's, these typical moves where you have a bearish pattern in play, the retracement, 38%, 50% is pretty common area for this to kind of find support and then take off to the next leg. So let's see what happens. So there you go. You see that bounce off the 38? Came down and retested it. And then boom. And then we're live. So the initial structure is done. We came up actually pretty close to, let's see here. Yeah, we didn't quite come up to this original second target, but it's really not not valid anyway because we had the pattern, we finished the pattern, we got the retracement to the 38. I mean, this is why I kind of preach these and preach Fibonacci's, because you had the pattern, everything respected. It respected almost to the penny this level on the 88, which was what we were looking for the first target. Then it failed, not failed, it completed, and you got this retracement, and it retraced to the 38, which we talked about, Bitcoin being fairly bullish into this administration. So it makes sense that you get a pullback, pretty conservative pullback. We weren't looking for, this move all the way back down to C, which is textbook what these typically do, is you get a full retracement. But the fact that it came down to the 38, tells us that long term, or at least for now, we're in a pretty bullish territory.
So, given that it went down 2 bars to 102,000, why wouldn't you have started to get out there?
Here?
Yeah, underneath that's 2
get
bars
out of
down,
the long or
levels
get out
down.
of the short?
Get out of the long.
Well, first of all, if we go back, see here. So the long that we were in, we were looking for this 88.6 and potentially 110.323, right?
Yep.
We got the 88.6. So at this point, if you were not down to runners, you're crazy.
Right.
So maybe you had runners for potentially this higher level. But once you jump into a smaller time frame and you hit that 88.6, once you lose this 103.373, you've come down off of 2 Fibonacci levels you've lost.
Right.
This pattern has failed. Well, not failed, but the completion is in.
Okay. I see. So it's a completion.
So your runners are stopped out here.
Even above the 102 level.
Oops.
Okay, the first bar down. The first level down.
Yeah, because you've compromised two. You've compromised the 78.6 and the 70.
Yeah, I had your 2-level rule stuck in my head for some reason.
So you're out of the trade here, and maybe you start a short.
Gotcha.
But I didn't, because I kind of figured we may get this pretty conservative pullback and then a bounce.
So it's 2 levels up, 1 down, or 2 in your direction and then 1 in reverse.
Yeah.
Gotcha.
So,
thank you.
So that's basically how I play it. This was a nice one to look at because we got the completion. We got that retracement that was pretty conservative to the 38. I know you see the 50 fib here because it's a different measurement. If I put those on as well, it just gets a little confusing, but you can kind of see this blue in the background here. That's the 38. So it kind of was confluential with that prior 50%. Not that the 50% matters as much now because the pattern's complete, but you got the 38 retrace and bounced. So that's where we are. So now we just wait for something else. If you are long, you can stay long. There's nothing drastically changed in the structure of overall. If you go out to the daily chart, we just know that we had that harmonic in play. We played it, worked out nicely. Now we wait for the next setup. Okay. Hold up. Just have to blow my nose. All right. So let's jump into Tesla. Tesla actually had this weekly harmonic that we'd been playing out. Um, this one I liked. Let's get rid of this other harmonic because we can go into that in a little bit. So on this weekly Tesla harmonic, let's go back to here. So I see this on a weekly chart and I start to get excited. And this was back in May, June 24, right? So I see this, and I can even take this off for now. I see this structure. I'm like, okay. On this big picture, I see this down leg. I see this retracement, this down leg. Are we looking for something bigger here? So it's starting to look nice, so I want to measure it. So I take my measurements, and I know, okay, we have a 632 here, we have a 81.3 here. So I bring up my little cheat sheet here. Oops. And I know that we're within the parameters of a bearish crab. We came a little higher here with this wick, 632 instead of 61.8. But on a weekly especially, you can have some slippage. You can allow for a little bit of slippage. If you go to the body of the candle, we're within the range. So we're looking for a bearish crab. That means we can have a move as high as a 161.8.
How do you gauge what kind of slope to put up to the D point?
Depending on the pattern, I'll put this up at the maximum, but I'm going to draw my Fibonacci's next because this is a weekly chart, so there's no way you're going to take a position and wait to take profits for $600. I'm still long Tesla from down here, but I've taken shitload of profit in between. So we know we have this structure in play. So this is a weekly chart. So this isn't something that we're looking to jump in and get at in an hour or a day or a week or a month. This is a setup for a investment. This isn't a trade. I mean, it's a trade because we've got a technical setup. I guess if it's an investment, you're looking at the fundamentals too. But, I did feel Tesla was cheap down here. I like the structure. I like the setup. So we're looking for an entry. Well, we're not going to enter on a weekly chart. We're going to go down to a daily and say, okay, is there anything setting up? Well, I jumped into a daily and I'm like, oh, there's a setup here. We have a shoulder. We have a shoulder. We have a head. That's a pretty clean inverse look to it. We have this 23 Fibonacci here. We have a little bit of a support level that we've wicked down to over like around 167. So we can draw a line in there. And we can take an entry here. We got a really tight risk here. We're at 175, 178. We've got maybe a $10 risk. So you could take the underlying. And I think when I took this trade, I told people if you don't want to trade options, you don't want to trade equity, it's too much, whatever. Even if you take 2 shares, 3 shares, 10 shares, whatever you can for your account. If you don't want to lose more than $100, you take 10 shares. And, you've got a $10 risk, so you got a $100 risk. And then you jump out and look at all of this upside. Your potential reward is $200, $300, $400 a share. Seems ludicrous when you first take the position, but why not? You see the chart, you see the setup, it's there. So let's jump forward. Let's go in 4-hour increments. So we're already up after, what was that, a week? And we're hitting 221, 227 off of a 177, 178 entry. I actually got it at like, hold on, let me look. I forget what I paid. So I have equity from 174.14. I think I bought it when we dipped down here. We got a bounce here and I picked it up around just below this. So we're already almost $50 in the money. And we were playing options here too, shorter time frame. But you had literally no blood on this trade, and you're up $40-50 in equity. If you took 10 shares, you just made $500 for a $100 risk. I mean, this is how you build small accounts. And then this continued to march up to the 50. Now you're at 258. So now you're up $75. You just made $750. I mean, obviously you scaled here, but this is how you take an entry on a weekly chart. You look for something setting up on a smaller time frame, and you take that entry, and you use these Fibonacci's and these support levels as your risk. And when you look at a potential entry, you look at this area and say, okay, if I'm taking a trade here, I've got $5, $6, $7, $8, $10 of risk, and you size appropriately. And now we're at this level where we're already $75, $80 in the money. You're not worried about anything. This can pull back $30, $40. Doesn't matter. As long as we keep in structure here, you can bounce out to a daily chart. This pullback, if you're in a shorter time frame play, you're going to get a little concerned. But no need. You've already well scaled. You've come back down to the 38, so one fib level down, so still no concern. You've come back down to your entry. You can re-add there. If you started compromising it, then we're looking at a failure, but we didn't. And you could have added back, and you could have scaled here, got a quick scale in. Now you're back at the 50, you're scaling again. And now you're really taking off. You got the 61.8, you're scaling. Now you're at 320 off of a 175, 177 entry. You're almost at 100% profit in equity. And it just kept going. You got another scale at 350. And again, we're coming down, and we're going up into one level and back down to another level, but we've not compromised two levels. So we're still long. And of course, the move from fib to fib is more pronounced because we're in a weekly chart. So there's 30, 40, $50 between these levels. But we already got this initial scale that allowed us to be a little more comfortable in the trade. And again, we've taken a 177 entry, wherever we talked about down there, and we're at 450. I mean, you just made $300 profit per equity share. And if you took leaps or a longer term option contract, that's God knows how much percent profit. See, now you've compromised two levels. So now we're looking at this potentially being complete. So if you've taken profits, now maybe you're out or you're in runners, which is what I still have equity runners, more just long term investment. But I've taken so much profit, it doesn't necessarily matter. I don't have to completely get out if I want to hold some of these long term. And then we had this is probably getting into January here. Yeah, so that's where we're at now. Okay. So let me get rid of this. And let's look at the Tesla entry for last week. So last week, let's come into Monday morning here. Okay. So last week I came into last Monday pre-market. I'd been eyeing this in Tesla. We have this M here. We know M's are bullish, right? So I'm looking for a long position off of this. Started, last Thursday, Friday, I was kind of eyeing this. But I've mentioned before, when you get these reversals off of a bullish pattern or a bearish pattern, I'm trying to establish another pattern for confirmation of that reversal. So we're looking for a long. And I come in and I see that we have this here. So potentially the C to D leg on this W fulfills the long bias off of this M. Okay? So I see that and I'm like, okay, let's pop in the measurements. Let's see if it works. When I say if it works, excuse me. Oh, shit. Sorry about that. So this is Monday pre-market. Let me jump into a 15-minute chart. I know these measurements work. So I think we got this a little dip at the open. Let me see. Yeah. So we got a dip down here, which was at 86% retracement in this pattern overall. And when I saw that and I saw a bounce at the open, trying to get to the open. There we go. So we got this dip right at the open. And it came down to an 88. This level here we look for, the maximum retracement is 88% to qualify as one of the main harmonics. When I say main, not a shock or a cipher. Shock and cipher are the only two that dip below the 88 to a 113 to a 161.8. I prefer we get this 88 retrace, because once you get below that, you're kind of guessing for 113, 161.8, or not guessing, but you're looking for that, and it's more, I guess, challenging to find an entry spot. So when we dipped there, I know that this meets all of the other measurement requirements. We're looking at this being at 55%, this being at 88. So we can go in here. It qualifies as a bearish crab. It qualifies, as a bearish bat. just. It's a little bit of a slippage here because this is 50 and we got 55. But we're definitely within the parameters of a bearish crab. So, 161.8 is potential, or, 886 to be a little more conservative. So I'll usually just pop up the 88.6 and shoot for the more conservative number first. Drop in my Fibonacci's. Now, when I told you before I took an aggressive entry here, I didn't wait for us to get above these, back through these two Fibonacci levels and over this resistance. I took an entry right down here. And I knew that I had a super tight risk because I took it because we basically hit this 88 level. And that's the lowest point that you want to see for this to work out. If I'd have taken the entry and the price came back down here below the 88, maybe down here to a 93 or whatever, we're not qualified for this pattern anymore. So my risk was a few bucks, maybe. So I took the entry down there. It was pretty aggressive. You could have waited until you started breaking over 400. In fact, after I took the entry, I posted on Twitter and said, hey, if Tesla takes out 400, we got a potential pattern in play here to 420 to 430, which is the 50 fib to the 61.8. And that was my initial target in this. So we start bumping forward and we were compromising this 23. We're getting up to this 400 level. We played around there a little bit. And then we finally busted out. Now, again, we took an entry here around 380. And we literally never saw red in this trade. And now, at this point, by the afternoon, by the close of day, I think we were almost at 100%. Or probably 60, 70%. And then we get into the overnight session, pre-market, and then we're into the next day. We got up to this 50%, gave you an opportunity to trade out at 420. We're in the money. And we had I remember posting in the chat to take a decent scale at the open because we got this gap up to the 50 Fibonacci, so we took scales there. And again, we retraced to this next fib down, and we came back down to the 23. So I'm starting to think, we could have basically seen a failure here at the 50%. But we're holding this level here. So I was still kind of watching it in the pre-market. And we held that level really nicely. So I didn't, but it could have been an opportunity to add back here at the open. Or if you were playing equity, to add in the pre-market. But again, it never gave us a reason to totally exit the trade. Gave us a reason to be a little cautious. And maybe had this had happened in the regular trading session, I'd probably be close to getting out because we did lose that second level, but on a larger time frame candle, it was a wick and held this 23. So that probably helped me that happened in the pre-market because you can't get out of options. So we've already taken, we're well in the money. We've had the opportunities to scale at the 50. We got close to the 61.8. We didn't quite get to it, but then we did on Friday. We got to 432, so you're scaling. At that point, I'm typically down to runners, which I am. I still have, I think, 2 contracts left in Tesla. And they expire this week, the 420s. But Friday, you obviously got a ton of opportunity to scale in and around here. And now this is where we're at. Oops. So that's how I played Tesla this last week. I'll address some of the questions now. How do I scan for stocks? Setting up for a C to D move. There are some people that have, I guess, scanners for harmonics. I don't. I'm watching on the indexes all the time, obviously, looking for things. I have all of my main stocks that I'm looking for. I'll just briefly run through my lists, usually on like a daily chart, and start looking for things. I can just go one by one and see very quickly if there's something there. It doesn't take me long. I'll jump down to a 4 hour or 2 hour, and just look with my eyes without measuring anything, just to see if there's anything setting up. So it's not necessarily, I don't have a scanner. I'm just looking, and on a larger time frame, you can typically see, if I just jumped into QCOM here and just looking at it, I can see just with my naked eye there was something interesting there. So potentially there's a short in QCOM tomorrow. But if you've noticed, in a bull market, which is what we've been in, I tend to play W's way more. I'll wait for an M to complete before taking the leg up off of this bullish pattern. But when you're in a bull market, getting these quick move downs is a little more challenging. And I find that if you get if the market's bullish, this bullish move here, you're going to get a little more acceleration than waiting for some sort of a down leg. Not that it can't play out. That just seems to work better for me. Not that I won't play them. I'll look for a good setup, but I play W's a lot more than I play M's. If I see an M, I'm typically waiting for the completion and then looking for a long off of the reversal.
When you're foraging like this, how do you gauge horizontally where to place the D point? I don't have a feel for that.
So it depends on the measurement. So if I was looking at this, initially I'll just put it anywhere, right? And then I'll draw my fibs. So the D point is going to be based on, let's take the fibs off for now because it's confusing it a little. So the D point is going to depend on these measurements here, right? So we have the 576 and a 788. So we know we've gone a little beyond where we need to for a bat, but let's say it was 50%, and we're pretty close to that. So we know our D point needs to be at 886. But if we say no, we're beyond the 50, so we have to look at a different pattern. Maybe we're looking at a bat. No, because this is 382, and we're beyond that. So, and the butterfly is looking for 786, and we didn't quite get that, so we're not there. But bullish crab, well, we're within the parameters of a bullish crab, so we can look for a 161.8 potentially in this. Gartley, we didn't get to the 61.8. We're close. So sometimes, it's not 100% exact. But right now, the only parameters that we fit is this bullish crab. So if we get rid of that, then we know we can put this D point at a 161.8, which is somewhere around here.
How did you gauge the horizontal displacement there? Time.
How did? Oh, you mean where to put this time wise?
Correct.
It's a guess. To be honest, there's some people that use these time based Fibonacci's, but that's different. Um, I just try and remain in what's the word I'm looking for? Symmetry. I talk about symmetry a lot. So you don't want to be putting this like way out here. You know, you want to be fairly reasonable. So this is more of just a price target, not necessarily when it's going to hit this target. But if you're playing this pattern on an hourly chart, you're not looking for like this. You know, you want to have some sort of symmetrical aspect to it, like around here. But again, this is a
So symmetry with the XAB.
yeah.
Okay. Thank you.
So that's how I scan futures. Yes, I use harmonics on everything: Bitcoin, futures, indices, stocks. Um, do I draw harmonics and based on measurements look for the pattern or vice versa? I mean, I think I showed it here. Basically, I'm just scanning and looking. You know, if I see something like I did here in Tesla last week, you know, and I see this. You know, before I even draw anything, here we go. Before I draw anything, I'm first seeing this, and I can tell it's not hard to identify that you have something that looks like it's the start of a W. So once I see that, I'm typically drawing my structure here, drawing my fibs, and then once I get there, I say, okay, I can take an entry. Here's my risk. Here's my entry. Let's go. And as I said, then I'm just looking for scales on the way up at each level. So, oops. Melania coin. But in all seriousness, I look at that and I can already see that the middle of that W that he just shared, I don't know if that will pull up here on Trading View. I don't think it does.
It probably will. It would, yeah, US dollar, USDC if you have it. Yeah, that's not it. Nope.
No.
Who, what, um,
But anyway,
I mean, you can go, so if you go to dexscreener.com, because they have a connection to TradingView. Yeah, and then click on Melania. It's probably the first one there. Yep. It'll bring up a chart on TradingView.
there you go. So, as I was looking at that, I can identify right away that this doesn't qualify as a harmonic because two reasons. This retracement is way too high. This needed to be no higher than a 786. or an 886 here. And this retracement came down lower than an 886, so you were looking for a minimum of a 113 to a 161.8 to qualify, had this have gone no higher than the B. So I guess that was the point I was trying to make.
Is
Just by
is there a
visualizing these patterns, I can tell it's not a harmonic just by looking at it without measuring it.
is there a reference, a handy reference for those minimums to qualify?
Yep, I posted it. My smooth harmonic patterns that has all your measurements there.
Okay, so you just have to rifle through the measurements. There isn't a rule of thumb.
No, you basically just remember that if it goes below an 88.6 on the C point, not that it doesn't qualify, but then it has to get to a 113 minimum to qualify, down to a
Thank you.
161.8.
I mean, so to simplify for you, John, because I think about things the same way you do, in a lot of regards. But the probably the best way to do it would be to if you identify sort of by sight something that looks like it could um, qualify, right? You draw your fibs, and then you get your the certain levels that they would need to get to, and then you can qualify it quickly by once you have them drawn.
Yeah, and I just shared another
Thanks.
cheat sheet that I have. It's a little hard to decipher, I think, but kind of shows you those impulse legs and what the qualifications are and what it could
Now
be.
you're talking my language.
So that might help you. I know that might be complicated for some people, but I just shared that. What tolerance do I have for it being off the thresholds? It depends on the time frame. The shorter the time frame, I have less tolerance. The larger time frame, where you have big wicks and things, um, you can be a little more uh, loose, I guess. This was one we did last week, also SE. Because this is a good example. See, this is a 4-hour chart. And you see this came down to 892. So, in theory, we take this off the screen because it doesn't qualify because it came below an 88.6. It should have been stopped around 103.60-ish, and we came down to, 103.50-ish. But look at this wick. And this is a 4-hour chart. So technically, once we dropped below that level, we came down to 892 instead of 886. It doesn't, textbook, it doesn't qualify, but it's pretty damn close. You're dealing with, a mixture of algorithms and institutions and retail traders buying and selling. And if the algorithms are what are controlling these moves, plus the aspect of the self-fulfilling prophecy of other traders recognizing these patterns and taking positions, you're always going to get slippage. And the reason I say I have less tolerance for smaller time frames is because on a smaller time frame, on a 15-second chart or a 1-minute chart or a 5-minute chart, your algorithms are moving things around a lot quicker. And they can, you're looking at smaller trades, so they tend to be more precise. And if you start getting slippage, it really affects the ability to watch a pattern succeed in those environments. So I have less tolerance for slippage on a smaller time frame, but on a 4-hour chart, daily chart, weekly chart, hourly chart, I'll allow for a little more slippage.
Would that be an instance where you might get your points redrawn to just the bodies for your XABC to see if it qualifies without the wicks?
You can. Some people prefer to use the bodies. I use the wicks because I think that all price matters. So I'm a wick guy. That's a preference thing. But when you, over time, when you play these, and when you use Fibonacci's, and you see how prices can hit and wick off of a Fibonacci, you really have to pay attention to all price. Plus, what's a wick on a 4 hour is body on a 1 hour. You know.
Thank you.
So that's how I look at it. So Roku could be a bearish deep crab, but it's kind of off. Could be my charting Roku. See, I look at this already, and I'm saying it's not going to qualify. Because look at this retracement up here. It's higher than your start point. Unless your start point is up here. It's a little messy. So I'll start it up here. Yeah, it's not really qualifying because this is a tough one. You know, and this is why when you play these, you'll get a feel for it. Could this qualify? Yes. You know, we're basically looking at a deep crab because we got this 886 here, and we're at 863 if we use this start point here. But then we've gone beyond this 886 here. We're at 935. Even without the wick, we're at 90. You know, this really had to have been around here. But, you know, we can still say, okay, this is pretty close. I don't like the structure. I don't like, you know, all of this kind of messing around in here. You know, it's a little choppy. Not that it can't play out, but this isn't an A+ setup. You know, I think somebody mentioned that Cold Stone's analogy, the like it, love it, gotta have it. You know, this isn't even in the like it category for me. This is in the, could be something. And with so many A+ setups out there, this is not one that I'm like, okay, I'm ready to jump in full size. So, and I hope you can see why. I just don't like these deep crabs where you get this 88% retracement up here. So this measurement is already in a spot that I don't like that much. The whole structure looks messy, and then we already came below the 88.6 here. So there's like 3 demerits against this already for me. So it's not something, you know, if you put a gun to my head, I'll take the trade, but voluntarily, I'm not really, you know, when I say with a gun to my head, I'll take the trade. If you said you have to take a position, I would take a long position. But if I'm choosing, I'm just sitting this one out.
Why wouldn't you move to the left and draw the M?
You would, you potentially,
Okay.
you know, that's another reason why, you know, but it's still, it's really messy.
Okay.
Let me see. Did I miss any questions here? No. We won't go over this today, but you know, I play mainly these M's and W's, but you do have these other structures, your ABCD, your 3 drive patterns. They're less common, but things that you can just look out for and identify. You do have tools here to measure your ABCD, your 3 drive patterns, and then your Elliott waves for people who really want to get into the magic. I don't play with Elliott waves. That's a
These
little.
are all reversal patterns, correct?
Yeah. So W's are bearish, M's are bullish. That's pretty much all you need to know.
And Willie mandates you look at Microsoft right now.
So Microsoft shared last week. Let's get rid of everything. Make it cleaner. Excuse me. So we see this structure. A little more difficult to identify. But we can start looking at this. We come in, we see potential for this. So I came in last week, I draw these. And we got a 67% retracement here. We came down to a 121. So we can start pulling up these and say, okay, we're, accounting for the wicks. We qualify for a Gartley or a crab. Otherwise, we really don't necessarily qualify because we didn't quite get up to a 786. We don't qualify for the butterfly. And we came over the 61.8, so we really don't qualify for either of these. But this is where I say that the wicks kind of come into play. But then we compromised this 88, and we came down to this 121. So now we're saying, okay, we take away the butterfly, we take away the crab, we take away the Gartley, because it doesn't qualify. We came below an 88.6. All of these have a maximum 88.6. So then we jump out to the two patterns that we know qualify once we break the 88.6 and we come down to a 113 minimum. So now we say, okay, this has to be either a shark or a cipher. Now a cipher has a maximum 61.8 for this X to be, and we're 673, so we say, okay, the shark doesn't have that requirement, it doesn't have anything here, so it qualifies as a shark, doesn't qualify as a cipher. But I still keep that in the back of my mind because look at this wick, and this is on a 4-hour chart. So as I said before, I have a little more tolerance for wicks. If we're just looking at candle bodies here, we definitely qualify for a cipher also. So I'll keep that in mind. So we've got a 786 target minimum, then 886, then 113. So we know that we can put this up to the 113, but then we know that this is a target, this is a target, and this is a target, and obviously all of the other fibs on the way up. So that's how I'll typically look at a pattern, then chart it out. I'm sorry, I did a 4-hour chart here, but to take an entry, you could have taken something aggressive down here, but once you get through these two Fibonacci levels, that's typically where it's a little safer. You can kind of draw your trend line too here. So once you get over this 23, you can take an entry, but you're wary that there's a trend line right there. And your first fib, you're taking profits up here. You got to the 50 Fibonacci, you took profits there. This gave you an opportunity for a second entry down here at the trend line, and this using this trend line and 23 as a your support, and that was a decent entry spot, and then it got right up to the 61.8. So it was another good opportunity. Decent long, it's still in play. for hire next week, but that's kind of how I would. I didn't play Microsoft. I know Nara was in it. Also, one thing I want to mention here. Let's jump out to the hourly. You kind of had another harmonic within a harmonic here too. So I think I mentioned that last week. You got a trend line there, so you could have taken an entry up around 419 as well, based on this smaller harmonic.
How do
So
you gauge the angle of your trend lines?
it's based on the harmonic. So this one, let's say was this. So I'm just looking for, just whatever makes sense. You can just see by the price where the trend line is. And then we broke out of it here. So if I was looking for a trade within this larger structure, looking for an entry, and I spotted this harmonic here, so price is down here, I'm looking for an entry, we're coming up, we're testing this trend line, testing, we break, I'm taking an entry. Or maybe I'm taking an entry right in here once we cross over this 11% fib. And then you get to this trend line, you're taking profits, you're taking profits, you're taking profits, you're taking profits. So that's it. All right. Any other questions? One more? Okay. Chewy. I haven't looked at this chart in a while, and look at this. This is an old Fibonacci. Let's see. Okay, bullish cipher. What time frame are you on there? 4 hour. It's too early to tell because you're at a sort of a double top type area. Remember, this needs to be 113. So let's draw it. So this 1.03 hasn't met the minimum requirement to qualify for harmonic, which would be a 113. Let me take my. So you need to be right around 38.20 for it to qualify. But the difficulty trying to take a short position, if it did come up there, let's say, and we're also, now that didn't get there, now we're going to be over here, and now we're looking a little non-symmetrical. So had this have come to 113, I'd be a little more in favor of that, but we didn't. And obviously, it could have come all the way to like a 161.8 also. So yeah, you want to look at these and kind of look at these swings here, and you want this to be sort of in this 88 range, or if it does get to sort of that double top area, you want it to extend to that 113 to 161.8 to qualify. And all of this, if you take the harmonics away, if this did come to a 113 or deeper, what's the psychology of that trade? Well, it's a breakout and break back down, so it's a false breakout. So yes, it's a harmonic, and you're playing it as a harmonic, but there's other traders that are just playing this false breakout and shorting it. So, people talk about double bottoms. What is it? It's just a W. And a lot of the time you get not quite a double bottom. That's because this has come to an 88.6 and it qualifies as a harmonic. So your algos or harmonic traders are taking a position before it quite gets to that double bottom. But then other times you get that little double bottom that goes a little below, which is the false breakdown. And then people are getting long once it gets back into the range. So these harmonics also, people trade harmonics without knowing they're trading harmonics is basically what I'm saying, because they reinforce other styles of trading where people take these double tops, double bottoms, false breakout, false breakdowns. So they just don't know they're trading harmonics, and they don't have the advantage that we have of using the Fibonacci measurements within the harmonic, so we know when we're entering where is our risk, where are we taking profits. So
is it the case where a bearish crab is actually simply an inverse of a bullish crab? I'm trying to get it right in my head, that any single animal, the measurements are the same whether it's bearish or bullish.
yeah, it's just the inverse.
Okay, thank you.
And a lot of the times, especially on the smaller time frames, and on chop days, you'll see, we can go into the ES. Let's go into a minute chart on the ES. Let's get rid of my moving averages. And let's even go into a 15-second chart. I mean, you'll see these pop up all over the damn place. There's one right there. That's going to be a shark. There's another one here. There's another one here. There's another one here. I mean, they're all over the damn place. Actually, this is a cool one on a 15-second chart. Let's see if I can get in there a little tighter. So on a 15-second chart here, you have two harmonics here. You have this W and an M in the middle. And you can again use the fibs and look at these areas getting hit. So there's another one there. I mean, this is a 15-second chart. So people ask me what time frames can you play harmonics on. You can play them on all. I mean, again, little M in the middle. I like to see those M's in the middle. Kind of gives you that double confluence. There's another one. I mean, they're everywhere. So I'm not saying you want to play them on a 15-second chart. That's for high frequency traders, scalpers. I'll play them on the minute chart sometimes, but you're talking micro moves, a couple points. You really want to be looking for those 2 hour, 4 hour, like this one here that we were watching last week. And they're not always going to be clean. Some are going to be cleaner than others, but this was a pretty nice looking one here with a little M in the middle. So another one there. This was kind of nice because you had this nice harmonic setup with the M in the middle, and then you got a really nice short off of that.
How would you draw fibs on an M in the middle like that?
You wouldn't necessarily have to because you see it's within a larger structure, but you can. You can still go into here and just kind of look at this end at the basically was provided a double bottom. But this is on a 2-hour chart. This is one that would technically not qualify because this went beyond the 88 and didn't get to a 113. But again, we're on a 2-hour chart and we have these wicks. So I'm not necessarily saying you want to use the bodies of the candles, but you know that the bodies would make this qualify. And we're on a 2-hour chart, so I have a little bit of flexibility, more flexibility here on a 2-hour chart or a 4-hour chart than I would on a 1-minute chart. So even though this technically doesn't qualify, I give it a little leeway because of these wicks on a 2-hour.
Thank you. Learned a ton today.
Good. Anything else? Anybody? Last call. I think what are we, 10:30? So we did 90 minutes. All right. I think we're good. I will stop the recording and I'll find a way to share that. Thanks, guys. Have a good Monday. Enjoy the inauguration. And we'll see you tomorrow morning. Tomorrow is Tuesday, so we'll have spaces. So no pre-market call, but we'll be on live trading after.